Hey guys, Toby here from Yield Labs. Thank you so much for joining me today. I want to have a little chat about stablecoins. Most of you will be really familiar with what a stablecoin is. However, someone in our group asked a really pertinent question this morning which prompted me to make this video. A stablecoin is a utility token built upon a blockchain. Now, the entire goal of a stablecoin is to create a cryptocurrency that isn't volatile and doesn't change in price. They are pegged to a currency, predominantly the US dollar. There are stablecoins pegged to other currencies too, but they're fairly insignificant in the grand scheme of things. So there are two main types of stablecoin, collateralized and algorithmic. The former being centralized and the latter being decentralized. So we saw a lot in the news last year that the SEC is breathing down the neck of, honestly, the fairly unregulated crypto market and looking to clamp down on illegal activity that may or may not be happening in the blockchain space. By far, centralized, collateral-backed stablecoins are the most popular, with them having the highest liquidity on exchanges and the most trading pairs. If you go over to any of your favorite exchanges, Binance, FTX, whatever that exchange may be, you will see that the USDT or USDC and Bitcoin, or USDC, USDT and ETH, or whatever, all these pairs have the highest liquidity and the highest volume in a daily window. They are vital to the operation of the crypto ecosystem and provide immense liquidity and can often be used for real-world applications too, such as payments and savings. These are coming along slowly, but they're not like fully integrated into sort of real life yet, but we're getting close and that's exciting. So there are many stablecoins: USDC, USDT, Paxos, DAI, GUST, UST, so many, like the list goes on and on. If you go to CoinMarketCap and just filter by stablecoins, you can see there's like 75 or something in the list. A lot of them nowhere near peg anymore, but that's what this video aims to talk about a little bit. So let's take a look at some of the most popular ones and look at their category and market cap. So first of all, we've got Tether or USDT. This is a collateralized and centralized stablecoin. It has a market cap of 78 billion. Next, we have USDC or USD coin. This again is a collateralized and centralized stablecoin. It has a market cap of 44.7 billion. And one of my favorites is Terra USD or UST. This is an algorithmic and decentralized stablecoin. It has a market cap of 10.5 billion US dollar equivalent. And finally, we have DAI. DAI is an algorithmic and decentralized stablecoin also. It has a market cap of just shy of $10 billion at 9.5 billion, something like that at the making time of this video. Now let's have a little overview of them. Tether was created by Bitfinex, and Tether, it belongs to the category of fiat collateralized stablecoins. This means that fiat currency like the US dollar, the euro, the yen, backs each crypto coin in circulation. Now, these deposits aren't necessarily liquid cash either. The collateral reserves are invested in various markets, sometimes very risky, long maturity investment instruments, and this is where a bit of the scrutiny comes from. This brings to the spotlight being cast on Tether during the recent economic downturn during the pandemic. The Securities and Exchange Commission and the New York Attorney General were breathing down the neck with lots of fear, uncertainty, and doubt being cast over Tether's reserves. The questions that they were sort of asking were if there is enough to cover the USDT in circulation, and something else that they were concerned about was perhaps balance manipulation and losses being brought into question too. Now, below in the video description, you can find an attestation from Moore Cayman about just how these reserves are built, with which assets, and this might help you make a decision on whether USDT is something that you want to use or help give you a bit of reassurance. Next, we'll talk about USD coin. USDC was created in partnership with Circle and Coinbase. Again, they follow a similar strategy to Tether, allowing them to yield on the collateral that they have locked against the assets that they have cover the USD in circulation. However, they differ slightly as they have less risk in their portfolio and with shorter maturities on their riskier assets and instruments. Again, you can find information about these in the links in the description with a copy of their most recent attestation too. So these are the two highest market cap stablecoins, making up a combined 5.6% of the total cryptocurrency market cap. That is the total market cap, not the stablecoin market cap. So like 5.6% is absolutely huge. So with centralized stablecoins, you always have some inherent risk. The whole purpose of blockchain technology was to decentralize finance. And if you're using these centralized company-created stablecoins, then you are at a potential risk of these companies and their underlying assets failing or losing value. They're misrepresenting the collateral that they hold, or the biggest one of all, perhaps a loss of faith and a bank run, meaning that everybody is trying to redeem their stablecoins all at once. And now, whilst this is theoretically possible, I'm not sure that they have enough liquidity in their cash equivalents used as backing for some of these stablecoins, and this comes into question as to whether they could fulfill this demand. So now let's dip our toe into some more technical stuff, decentralized stablecoins. The two highest market cap decentralized algorithmic stablecoins are DAI and UST. Let's look at DAI first. DAI was created by MakerDAO and the Maker Protocol. DAI is generated by locking collateral into the MakerDAO vaults, where users can borrow in the region of 60% against their locked collateral. The borrowed funds are paid out in DAI, and when the loan is repaid, the DAI is burned and the collateral is released back to the borrower. Now, an issue with MakerDAO and DAI is that a lot of DAI's collateral is actually USDC, meaning, well, you're kind of defeating the purpose of it being decentralized if a huge portion of the collateral backing DAI is actually a collateralized, centralized stablecoin. Now on to UST. UST was created by Terraform Labs and is the native stablecoin on the Terra blockchain. The way that UST is kept to peg is through a mechanism called seigniorage. This essentially means it is kept in balance with its native token being burned and minted. For example, for one UST to be minted, an equivalent $1 value of Luna needs to be burned, and vice versa. This is essentially arbitrage, and whales and people with huge amounts of liquidity can capitalize on keeping these assets to the peg by taking advantage of the price discrepancies on these stablecoin positions. For example, if you look on CMC, you can see that UST will approximately be like 0.001% away from being on peg. Now, this could be plus or minus, but this means that for every dollar, some cents can be made to bring this back towards a dollar even, or that sort of parity that we look for on a stablecoin. If you have a lot of capital, this can be very low risk and a very profitable strategy. Finally, there are other stablecoins like USDP or the Paxos dollar. These are much more regulated, so do your own research on these and decide if you like this or not. Whether that's something that you want to include in your portfolio or not, again, links down in the description to their latest attestation, and you can make your mind up on that. To summarize, stablecoins are a great advancement for cryptocurrencies at the current market. They are an excellent method of earning stable yields or savings, and we're excited to see where they go from here and how the market cap grows with new utility being thought up frequently. Thank you so much for joining me today, guys. I really appreciate your time. I hope this video has helped you understand a little bit about each of these stablecoins, what they do, how they're backed or not backed, and so on. Please, as always, do your research and make sure that you are very happy with any positions that you take. Stay awesome, guys, and I will catch you next time.